A prominent Bay Street economist is suggesting that rising interest rates is not going to save us from future increases to housing prices. That's right, the real estate affordability crisis is just beginning, and it does not appear that it's going to get better anytime soon. And in addition to this, CMHC just released a report stating that housing starts are not going to meet the 2030 requirements, meaning that there's going to be more upward pressure on housing prices as well. And add into all this the tight labor market and the suggestion by the Bank of Canada governor that there is still significant work to be done with respect to interest rates because of the tight labor market. And well, what we have is a formula for rapidly increasing housing prices again in the near future. But before we get into all the details, do me that favor, hit that subscribe button and hit that notification bell. And for those of you who are thinking about getting into the housing market and aren't sure exactly what to do and how to protect yourself in these uncertain times, I've opened up 10 more spots in my homebuyer masterclass. We're approximately a third of the way through the first cohort, and I'm going to add 10 more people into the group. You're going to have to do some catching up, but there are some spots available for just this weekend for Thanksgiving. So if you're interested in signing up for the homebuyer masterclass, which I think anybody who is looking to get into the market right now should be, go to homebuyermasterclass.ca. Okay, so prominent Bay Street economist Benjamin Tal of CIBC is suggesting that the affordability crisis in Canadian real estate is just beginning. And you know what? I don't know whether he's right here or wrong, but he definitely makes a compelling argument. And there's further data to suggest this week that we are going to face higher real estate prices in the future. So I want to jump you in. I'm going to show you headlines today. This is from BNN Bloomberg. Real estate, Canada's housing crisis is just beginning, economist says. They're referring to Benjamin Tal here. And Benjamin Tal is talking about in this interview two components they looks at with respect to affordability in the housing market. It is first and foremost the affordability for first-time home buyers, and the second is whether or not there's an adequate supply for newcomers to Canada. And what he's suggesting is that in both of these cases, houses in many of the major markets still continue to be unaffordable for first-time home buyers, and there's very little supply for the expected newcomers coming to Canada. And he's suggesting that the recent price declines, yes, they're helping, but they're not going to save us from future increases in housing prices as supply continues to dwindle while demand goes up. So really interesting article here, really interesting conversation to be had here. I genuinely don't know whether he is right or wrong, but he does make a pretty good argument for the fact that real estate prices aren't going to crash and that we aren't going to see massive declines as many people who are waiting to get into the market are suspecting. And that's why I'm suggesting that people take a look at that homebuyer masterclass, because we talk about the realities of what happens if you wait and if you miss out on the market versus if you get in now and what it looks like 25 years from now. But what's interesting is that CMHC has somewhat come out and supported this view. Obviously, these two articles were basically done around the same time. They weren't meant to support each other, but the data from both and the suggestions from both supports each other. And that's where CMHC is suggesting that there's not enough labor in Canada to support the 2030 supply targets that are going to be needed for housing to remain affordable in Canada. And really, they're pointing to the fact that there is just not going to be enough labor to build all the houses that we need. Combine this with higher interest rates and higher building costs, which lead to a lower appetite on behalf of builders to actually want to build properties. Well, it's going to get uglier before it gets better. And the rising interest rates, yes, they're having a downward pressure effect, but as that starts to normalize and as people start to realize that we're still at historically low interest rates, well, it appears that there's still going to be enough demand in the market to support current price levels. Now, the Bank of Canada governor, in a speech to the Halifax Chamber of Commerce, also suggested that there's still a significant amount of work to be done with respect to interest rates. While the data is starting to look better, there is still a tight labor market, which again supports CMHC's argument with respect to housing. And there's still a significant amount of excess demand in the economy, which is leading to higher inflation. So everything is supporting the fact that we are probably not going to see a major crash in housing prices, as much as some people would like to have you believe that we're going to see another 30 or 40% decrease. Now, most of the major boards in the last week have released their numbers with respect to real estate prices over the month of September. We're going to dig into those in the next few days. But the reality is that there's two potential arguments right now. The first is that because of higher interest rates, housing prices are going to go down substantially, and they still could. And the other is we still don't have enough supply in the housing market. We don't have the labor to build more houses, and therefore that's going to support current prices and push them up even further. Now, the thing is, if you're a real estate investor, you want to look at things from a short-term perspective. But if you're a home buyer, you want to be looking at this data from a long-term perspective and making your buying decisions based on a long-term perspective. So in other words, If you think housing prices are going to go up and that Benjamin Tal is correct, you may want to be buying now when you're ready as opposed to waiting and potentially paying significantly more, or even worse, having home prices become completely unaffordable for you and missing out on the market itself. Now, the other side of the coin is if you still think that there's room for housing prices to continue to go down, well, if you're making long-term decisions and you think that waiting a little bit longer and paying rent into that time period is the right thing for you, or if the timing is just not right for you in this moment, then go ahead and wait. But regardless of which side of this coin you're on, the reality is that it has become really, really hard to predict what's going to happen in the market. It's hard at the best of times. So when you're making these decisions, you need to make the decisions based on what's right for you at this moment. And when you are ready to buy real estate, make sure that you're buying a place that you can buy and live in for the very long term and that you can continue to support the costs of. Don't just jump in because you feel like you need to or you're going to miss out. Make sure you're buying the house you want, the house you need, and the one that you're going to be able to afford for the long term. So while there's not a lot of great advice there, other than the fact that there is upward pressure on the housing market as well as downward pressure, I hope you found this video useful. And if you did, please hit that subscribe button. And if you're interested in that homebuyers class, go ahead, go to homebuyermasterclass.ca and make sure that you check out this video here for more information on the Canadian real estate market.